So look, big macroeconomic changes afoot. What is your advice to founders right now in this moment?
My advice is to build. I mean, we're coming off a year that was the most exciting, exuberant year in not just fintech, but in the tech venture capital market in a decade, and where money was available in spades. And now we're at a time where the market has changed, and what we're telling our companies is to focus on building, not fundraising.
So how do you build without funding?
Well, the nice thing is because so many of these great companies raised huge balance sheets last year, they have the luxury of not having to go back to market. And so the distraction of constantly funding every 6 months, 12 months has gone away.
How is this impacting VC sentiment? I mean, I know that private market valuations are going down. Can we expect that to continue?
The way it's impacting sentiment is about as negative as you've seen. If you saw Bill Gurley's tweet and just the broader sentiment in South Park today, it's negative. I think that's oversteered. I think what we're seeing is an opportunity. And if you look at Index and other VC funds, the best investments are made at times of, on the other side of a cycle, and that's the opportunity we have in front of us
So how
today.
is that impacting your strategy at Index?
Well, we're focused on what we always focus on, which is can we find the best founders and can we get behind generational companies? I think if that North Star holds true today, through cycles, we're going to be just fine.
You're predicting a tsunami of Fintech M&A this year. Where specifically?
I think what we're going to see is a massive wave of consolidation. Again, last year was the party, this year is the hangover. We saw a lot of excitement, and what's going to happen now is that consolidation. The exciting thing, though, is the number of consolidators in the fintech space. If you and I had had this conversation 5 years ago, we would have thought about fintech as a vertical. What it's done is it's become totally horizontal. The acquirers are not just Bank of America, JP Morgan, Goldman Sachs. Now it could be Apple, it could be Google, it could be Stripe. So the number of acquirers has grown significantly. It's going to be a really exciting year.
Will we see crypto joining forces with traditional finance? Is that going to be part of the M&A?
I think it might be. I think the crypto yin to the Web 2 yang is absolutely a possibility, and I think we'll start to see those combinations in this year.
You've made a number of predictions. Before the start of this year, you said fintech in the metaverse, Gen Z on the rise, Gen Z traders on the rise, Stripe buying OpenSea. They are rolling out some more crypto features. Which of these things do you think is still going to happen?
Well, I think we still have 7 months of the year, so I'm going to wait on evaluating my predictions till then. But I think one of the more exciting trends from last year is this fusion of fintech and culture. And we talked about the meme stocks of last year and Robinhood, and I think what we're starting to see is that fusion of fintech entering the pop culture mainstream, the way that Cash App has a clothing store. Who would have thought that a bank would be, people would be wearing the clothes from a bank? I think that is one of the durable trends that's going to propel us in the next few years.
Robinhood is way down from last year, and the Gen Z traders are on Robinhood. So what's going on there?
I think Robinhood's genius was the ability to democratize access to the stock market. And if you step back from Robinhood, that has been one of our biggest themes at Index, which is how do you think about serving the 80 million underserved Americans? Actually, one of my most recent investments is called Nova Credit. They actually are able to offer immigrants without credit score an ability to get a mortgage or a car loan. And we think expanding access is really one of the big themes we're going to be working on this year.
Now, you are investors in a company, or were investors in a company called Fast, this one-click checkout area, which just recently disappeared completely. Just went under, said they ran out of money. What happened there?
Well, our investment in Fast was around this concept, like you said, of one click out. And what I think you saw with anyone who's been through an Amazon checkout experience or a Shopify is there's an opportunity for streamlined checkout. That was our thesis behind Fast. Obviously, it didn't work out. That's venture capital. But we're still really excited about the thesis and getting behind great founders.
Now, let's talk a little bit about SPACs. Some are saying that SPACs are a four-letter word. And there are many good four-letter words, but there are a few not good four-letter words. What do you think about that?
I think SPACs was an interesting innovation, but as with the broader market, we're going to see what's durable and what was more of a, maybe something that didn't last as long.
So where are you placing your bets?
Within fintech?
Yeah. And beyond.
For me, right now, what we're focused on is finding opportunities. In the fintech space, consumer finance. I think there's this tremendous generational shift between people that want to do banking from their phone, a lot driven by the pandemic, versus doing it at a branch. So today, less than 10% of consumers use a digitally native bank. That's going to change in the future. The second area is going to be payments. So I think those are the opportunities we're most excited about today.
Now, you were an investment banker during the Tesla IPO. What was it like to work with Elon Musk back then? What do you think of him taking over Twitter?
Back then, it was quite the formative experience for a 23-year-old straight out of college to get thrown into that. I mean, he was the same iconoclastic figure he was then as he is now. I think he had a few fewer zeros on his balance sheet at that point, but the same attitude.
Do you like the idea of him owning Twitter? We're looking at some of your tweets right now, so you're on there.
What I'm excited about is Twitter as a private company, what they can do if they optimize for the long run as opposed to quarterly earnings. So we'll see. There's so much uncertainty in the direction that he'll take the company, but I like the idea of it being private and seeing what they can build from there.
Do you think they should open source the algorithm? Is that going to change things?
I can't speak to that, but I think it is going to be exciting what they can focus on if they don't have the same short-term horizon.
What about employees who want to leave? A lot of people there right now. They don't know if we literally have a story called Why Bother? That's what employees are thinking.
We're going to have to see, there's obviously been a lot of negative sentiment, but if they can make the right long-term bets, it's going to be an exciting platform for years to come.